I wanted to very briefly show you how I use the stochastic for oversold, overbought, and for divergence. Um, Staying with the euro dollar on the daily time frame. Basically, what I like to see in the stochastic is oversold before going long or overbought before going short. It usually gives me that warm fuzzy feeling inside, knowing that there's one more possible element of convergence. No, sorry, one more possible element of confluence that will point to the trade going in the direction that we're anticipating. So let's just say, for example, we had drawn our fibs like so, and price had come down to the 50% retracement. In this case, we're very close to our 200 EMA, which is a good sign. We're not near any support and resistance. But by looking down in the stochastic right there, we're way in the oversold area, and we've been there for a while. So that would be a good sign for me. And in my 4 or 5 months of trading this method, the oversold overbought has come in pretty handy to giving one more area of confirmation that price is about ready to turn around. So that's one thing I really like to look for. If I'm going to go long, I'd like to see the stochastic already oversold. Even if it's not curling up and coming back over, if it's just pointing straight down but it's past this 20 line or right around that 20 line, it gives you that warm fuzzy feeling inside. And vice versa, when you're going to go short, it's nice to see price has already been in the over bought area, at least for a little while, maybe poked its head up in there. It doesn't have to be curling back down again, but that is one area that I like using the stochastic in. The other thing I like using stochastic for is divergence. I know you're not teaching the 4-hour time frame right now, but if you don't mind, I'll just show one quick example on the 4-hour time frame of how I use the stochastic for divergence for one more element of confluence. And that is, say we've determined that in this case we've drawn our fib like so, we see a 50% fib retracement, it's exactly at the 200 EMA, we feel pretty good about it. I look at the stochastic, I like to see if it's oversold, overbought. In this case it's neither. But even though from here to here to here we had 3 swing highs that were lower than the last one, if we look on the stochastic, we have 3 swing highs that were higher than the last one. So there's divergence between the stochastic, the oscillator, and the actual price action. So that divergence there would give another confirmation that we're ready to see more down movement. So that's really how the stochastic comes in handy for me. I just wanted to share that. I might as well mention one thing about targets. Like I said earlier, I have a long ways to go before allowing myself to just let go for those big targets of 500 to 1,000 pips. Probably partly because of where I am in my trading right now, and I think that if I had been profitable for say 6 months or a year, or had a lot of profits that I have gained over my trading experience, that I would have a little more patience to be able to sit on those big targets and have the patience to wait for those. But because I'm kind of more anxious right now and gaining my ground, and also trying to recover from certain losses that I've encountered over the last couple of months trading, I look for faster profits so that I can kind of justify the amount of time that I invest into trading. But one thing I do use is a tool. It's a trade manager. My favorite one right now is called MyFX. In the past I've used about 4 or 5 different EAs that scale out the trade for you and move your stop loss to break even or move it to wherever you want it to be. Artemis or Artemis Sitter used to be my favorite, but recently MyFX has taken the first place. I will use that a lot, especially when I'm trading several currency pairs where it's too hard to manually follow all of them on my own. Usually if I set a stop loss of 50 pips, I will be happy with a take profit of 50 or more pips, so that my risk to reward ratio remains at 1 to 1. And sometimes what I'll do is I'll take a little bit of the trade off at around 50 pips or 75 pips or 100 pips if that's where the projected target is for my first TP, and then I'll let the rest of the trade ride. That's kind of the level I'm at right now. Like I said, I'd be happy to be at a better level where I can kind of let go, like you said. There's one more thing I wanted to mention very briefly. Oh yeah, it's about the amount of currency pairs that are traded. Um, I'm not sure where my personal conviction stands on this one, but the person that introduced me to this trading method recommended that I stick to 1, 2, 3, or 4 currency pairs and not spread it out over so many, simply so that I wouldn't get confused and that it wouldn't be too hard to really properly keep an eye on that many currency pairs. And I know that Jacko in his thread actually suggested only one currency pair, and that was the euro dollar, which is the one he would trade. So right now I actually look at 12 currency pairs, and sometimes I find that it's too many for me to properly look at, to properly evaluate, especially knowing that a lot of currency pairs are correlated, some mimic others, and some do the opposite of others. And if you're on the wrong side of a certain pair, and you happen to be on the wrong side of its counterpart, then you could be going wrong in 2 different ways. So I just thought I'd mention, maybe for the sake of further discussion, about how many currency pairs really one should be looking at. On the upside, if we're only going to be trading the daily time frame and not break it down to the 4-hour, then I can see that having a lot of currency pairs is easier, because on the daily time frame things take a lot longer to unfold, and if you're looking at, say, 12 or 20 different currency pairs on the daily time frame, maybe it would give you more setups to take, as opposed to narrowing it down to maybe 4 or 5 currency pairs. Anyways, just thought I'd throw that out. I am looking forward to hopefully talking about a few 4-hour time frame entries. If I'm going to be honest, I'll say that about 80% of my entries have been done on the 4-hour time frame. A lot of them are counter trend trades, but my win ratio has been pretty high. I would of course rather if it were higher, and I would of course rather be able to get those big take profits that you've been talking about. But hope you enjoyed these little videos. Didn't mean for them to go so long, but hopefully they will be able to make things a little bit clearer than typing up a storm in the thread. Okay, I'll talk to you soon. Look forward to any comments you might have. Thank you. Bye-bye.